Over the last month, Alibaba's stock price has gone up by over 65%. And when a stock of a few $100 billion of market cap starts making moves like this in a very short period of time, it's clear that institutional investors are starting to buy in. And that's because we are starting to see a number of different catalysts coming forward for not only Alibaba, but China in general. So in this video, we are going to take a look at not only the institutional investors that are buying into this stock, we are also going to look at the catalysts around China and what they are doing to potentially help their overall economy. And finally, we will look at Alibaba's earnings. So if you enjoyed this video, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. Before we get into Alibaba's stock, I want to make sure to disclose that I do hold shares of this company within my YouTube portfolio as well as within my larger individual portfolio. The YouTube portfolio is currently sitting at a value of $64,920.87. And within this portfolio, we have a small position in Alibaba, only 15 shares with a current market value of $2,100. However, we are up almost 90% on this position. In my other portfolio, I have around 300 shares of Alibaba. However, I am only up around 40 to 50%. The other positions that I hold in this portfolio are Google, Apple, Microsoft, Palantir, PayPal, SoFi, Super Microcomputer, and Visa. In the last few days, we have seen some relative weakness in the market. One thing to keep in mind though is that oftentimes weakness in the market affects more speculative companies more significantly than dividend companies. So we have two dividend ETFs in this portfolio, SCHD and VYM. We can see that while a lot of other companies moved down by 2, 3, 4% plus, SCHD only moved down by 0.4%, while VYM only moved down by less than 1%. If we see the market continue to be weak, I would expect that SCHD and VYM will be weak by a lesser amount, and that could provide us with an opportunity to actually sell out of SCHD and move that money into more speculative plays, anticipating a turnaround again if the market shows some weakness. And on top of that, we already have a solid cash position in this portfolio of around $13,000. However, one stock that hasn't shown much weakness over the last month has been Alibaba. Alibaba is up over 65%. In the last 6 months, it's up over 70%. And in the last year, it is now up almost 90%. However, if you go over the last 5 years, this stock has still suffered immensely, down almost 33%. And from its all-time highs back in 2020, the stock is still down by almost 55%. And part of the reason we are seeing this large move up in Alibaba's stock price has to do with Wall Street taking notice of the value in China. One early investor in Chinese stocks was Guy Spier. He bought Alibaba stock back in 2021, and that actually proved to be a little bit too early to purchase into this company, and he hasn't really made any purchases since, so he's likely still down on his position. However, one super investor who has had a lot better luck investing into China is none other than the Carolina Panthers owner David Tepper. David Tepper has positions in Alibaba, Pinduoduo, JD.com, as well as Baidu. He even has a position in a China large cap ETF, and he added to all of these over the last quarter, making major moves into JD.com, adding to his position, building it out by 43%, as well as adding to his Alibaba position, adding 18%. And if you look at the buys and sells from David Tepper on Alibaba over the last 5 years, he has done a relatively good job of timing his moves in and out of this stock. We can see that back in 2020, he made large sells in Alibaba as the stock continued to fall. And then when it bottomed out, he began building out his position again. With the stock moving up more recently, I wouldn't be surprised if next quarter we see him selling some of his Alibaba position. However, it does seem like long term, David Tepper believes in this company and where it is headed. And locking in some gains is likely what Michael Burry did over this last quarter across some of his Chinese positions. One of those being Alibaba. Alibaba is his largest holding, and he reduced his stake by 25%. He also holds Baidu. There was no change in that position. JD he reduced by 40%, and then he also holds Estee Lauder, which is known to have a large presence in China, and then Pinduoduo as well. So across the board, Michael Burry is really betting on a turnaround in China. And Michael Burry is another one who has done a very good job of building out a position in Alibaba over over time as the stock has dipped, which is particularly interesting because he is not known for holding positions for long periods of time. He often trades in and out of positions, only holding them for a couple of months. So for him to hold Alibaba for a significant period of time is very telling about his belief in the company. But he is another one that, with the stock moving up massively in the last month, I would not be surprised if he is sold out of additional chunks of his shares. And part of the reason that investors are starting to get more comfortable with investing into China has to do with the fact that the Chinese government appears to be shifting their policy around business. A few years ago, we saw them cracking down significantly on tech companies across the country. However, more recently, China is actually holding rare business meetings with leaders across the country to become more competitive with the US. And what is particularly interesting about these meetings is they have even elected to invite Alibaba co-founder Jack Ma. What is very interesting about this is years ago, Jack Ma was very critical of the Chinese government and their policy around businesses. So much so that at one point, people thought that the Chinese government made Jack Ma disappear. And this is a very important step for the Chinese economy in general because it's been very weak over the last few years. And now we are finally starting to see signs of life out of the broader economy in China and even down to innovation from the country, right? We have seen this DeepSeek kind of AI scenario playing out from China. There's been a lot of speculation around it. However, the root of this shows that China can still be competitive in AI, which should benefit Chinese companies across the board. And Alibaba is already one of the top players in China in AI. They have their own AI model known as Cohen. Cohen they rolled out in 2023. However, they rolled out a more recent version called Cohen 2.5, and it is claimed to exceed the capabilities of DeepSeek's model. And they are actually seeing AI impact their numbers. AI falls within their cloud segment, and revenue in this segment grew by 13% year over year, and AI specific revenue grew by triple digits for the 6th consecutive quarter. And overall top line growth for Alibaba has been a little bit of a concern because their growth rates have slowed down over the last few years. Right now, they're growing revenue by about 8%. If we look at the breakdown of that, their major group, their Tmall and Taobao group, is only growing by 5% year over year. However, international commerce is growing by 32% and cloud intelligence is growing by 13%. So some of these smaller segments are actually seeing more rapid growth, which makes a lot of sense because Alibaba is already a huge company within China, so it becomes a little bit more difficult for them to grow their core business. However, if they can grow some of these other businesses like the cloud space as well as some of their international commerce, that will be huge for the company moving forward. With the stock price moving up significantly, we have seen their valuation start to creep up. They're currently sitting at a forward P ratio just under a 15, which is actually fairly high for where the company is traded at over the last year or so. We can see that it's consistently been around that 7 to 12 PE ratio. In my opinion, I do think that Alibaba should trade closer to a 20 to 25, so I still believe there's plenty of room for valuation expansion for this company. And one thing that can certainly drive up valuation is excitement around a company. And recently we have seen GameStop CEO Ryan Cohen actually increase his stake in Alibaba to $1 billion. I always say to not buy a company just because someone else did, and this is certainly one of those reasons. However, if you're already a holder in Alibaba, this could lead to some additional hype around the stock, seeing that GameStop CEO has actually bought into the company, and that could help drive up some of the valuation and overall drive the stock price up in general. But again, don't buy a stock just because Ryan Cohen bought it. Don't buy it because Michael Burry bought it. Don't buy it because David Tepper bought it. Don't buy it because I own shares in Alibaba. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. With all of that said, I hope you enjoyed the video. If you did, drop a like down below. Thank you guys so much for the continued support. If you want to continue supporting the channel, make sure to drop a like down below and subscribe for more videos like this one. And as always, guys, have a wonderful rest of your day. And for the joke of the day, what did the earthquake say when it was done? Check the comments down below for the answer. Thanks for watching.